10. Hello, I'm Jeremy Allaire, and welcome to The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. So this week we're going to be talking about banking meets stablecoins. But just to set the context a little bit on this, clearly a lot of the impetus for cryptocurrency, the broader digital currency movement, this money movement, as we say, it's really anchored in the idea that we're building a new kind of financial system, a more open, more inclusive, more global, internet-based financial system. And a lot of times, certainly from the early origins of this industry and even today, this is often positioned as, crypto and blockchain and digital currency is threatening to banks, that this is anti-bank in some way. And I think what we're seeing and what we're learning is that, fundamental innovations that are happening in this space, the use of public blockchains as a secure transaction processing and settlement infrastructure, the incredibly rapid rise of innovations such as stablecoins, may actually turn out to be the ultimate path to banks using crypto. We recently saw guidelines from the national banking regulator in the United States, which offered that federal banks, national banks in the United States could hold in custody crypto on behalf of customers. And we wonder if this is a harbinger of things to come. So meanwhile, at Circle ourselves, we're seeing accelerated interest from neobanks, challenger banks, fintechs, global banks, lots of firms that want to use things like USDC as a payment rail and as an infrastructure, which is very, very exciting. And then obviously outside of payments, which is a lot of what people often think about when they think about things like stablecoins, what about the real business of banks, so to speak, which is borrowing and lending? We're also seeing very rapidly evolving stablecoin capital markets, and that's happening through DeFi or decentralized finance and CeFi or centralized finance models, where billions of dollars of loans and borrowing in stablecoins is taking place, and that's rising at an incredibly fast rate. So with this theme of banks meet stablecoins, we're going to be joined by several, I think, excellent guests who are at the front lines of this convergence of banking and stablecoins. So joining us now are Oliver van Lansberg-Saadi, the founder and CEO of BCB Group, a European neobank that is embracing stablecoins as a core payment medium, and Julian Howell, the head of blockchain lab at Bank Frick and Company AG, similarly a fast-growing European neobank that has adopted USDC in their broader digital asset brokerage platform. Welcome, Oliver and Julian.
Thanks very much, Jeremy,
Hi.
for that intro. It's great to join you on this conversation. Stablecoins are an extremely exciting part of this space, and I'm looking forward to the conversation.
Excellent. Welcome, Julian. Nice to see you.
Hi, Jeremy. Thanks for having me. Exciting times, and very looking forward to the show.
Excellent. Well, let's get started. So, Julian, I actually want to start with a little bit about Bank Frick. I think I met your founder in Zurich many years ago, as you were literally, I think, quite de novo at the time. And you've really been a tremendous example of a challenger bank that is built for this new world, built with the digital currency and blockchain ecosystem in mind. Maybe you could just share, a little bit of the Bank Frick story first, and then I want to maybe also talk a bit about the role of USDC today and where you see it going. But let's just start with a little bit of the story.
Definitely, yeah. I mean, Bank Frick started about 22 years ago. It's an original bank from the traditional world, so a lot of focus on the traditional private banking sector. But with more competition in Liechtenstein, Bank Frick started to diversify its business model. First went into acquiring and processing of credit card payments, then e-commerce, and with that line of business, blockchain was for us the logical next step. We started in 2016 to offer services to blockchain companies. However, traditional products, company bank accounts, payment accounts, and so on. And then soon realized that just with bank accounts, the show is not really done. There needs to be a lot broader range of offerings, especially in the way of custody and trading. Since a lot of institutions need professional counterparties where the bank as a regulated bank can step in and facilitate this. And from that step forward, we continuously develop new products, narrowing down the customer group. So we have by today specialized products for exchanges, for brokers, but also in regards to token offering, miners, and see that, we went pretty well with serving specific needs of niches or customers that have a very clear problem which can be solved with a banking.
That's great. I mean, I think you're obviously an example of a bank that has really leaned in into this space and into the digital asset space. I think you made news recently, and obviously we're very aware of it. But this sort of step towards adopting and supporting stablecoins as a bank, and I think it's a bigger theme. It's one of the key things that we're talking about here today. But maybe just talk about the first steps that you've taken with USDC, and then maybe share a little bit about your thoughts on where you see that going and where you see that value.
Definitely, yeah. So for us, we either select new crypto assets on customer demands, or if we see an efficiency gain or some new products from our side. The US dollar coin, we needed, for our product offering, which we plan to roll it in the future, we need to use a stable coin. It just makes a lot of sense. And there were different stablecoins out there. For us, only, of course, regulated ones where the backing is audited came into question. And US dollar coin was the way to go for us. We integrated it into our custody infrastructure as well as trading offering. This is the normal step how we roll out new currencies. We include it into custody trading, and then from there on, kind of on a second level, build out specific products. And the roadmap for USDC looks pretty nice. I mean, maybe to highlight it, the ambition which we have, or where we want to go, is pretty much to have the same offering which we currently have for a euro or US dollar fiat currency, to offer that same thing for US dollar, for the US dollar coin.
That's awesome. We're going to come back to some of the themes that you touched on, but maybe turning to you, Oliver. Obviously, likewise, I mean, you're a rapidly growing neobank. You're serving these digital asset markets. Give us a little bit about your journey, and then you guys have been doing some stuff recently where sort of USDC as a payment medium has sort of become core, and would love to hear you talk about what role it plays and where you think it's going as well. But maybe just start again with a little bit of the journey.
Absolutely. Thank you for that, Jeremy. And Julian, it was great to hear how that path evolved. And what I observe here is a kind of a convergence to the center. So where Bank Frick is a great example of a bank who has come from more traditional roots and then embraced the blockchain business and developed products and services around that. We've kind of come at it from the opposite direction. So in 2017, when we opened shop, our primary business was in secondary markets, so, buying and selling crypto on behalf of customers, first as a broker, and then more towards the prime broker model, and then kind of lately more towards the market maker model. But it was in trying to move money around, especially dollars, which was super difficult at first, that it became clear that we needed be part of the solution to moving money at scale. So about 18 months ago, we kind of added the second critical vertical to our product line, which is this banking service, offering transaction banking for multiple UK and European market makers, exchanges, etc., just to clear those pathways for moving money. We've seen the stablecoin evolution and how that really facilitated trading at scale in the past, and it's become extremely clear, I think, to anybody in this market that stablecoins are the future of money. There is and now's a great opportunity to get in. And one particularly vivid illustration of this is, I'm looking at your latest USDC in circulation at 1.1 billion. Now, that sounds like a large number to some, but it's like the foothill of the mountain. I'm looking at the money markets, which there was like $1 trillion in issuance alone. Imagine the shift today from money market instruments in denominating USDC towards money market instruments. It's enormous. We're at the precipice of a massive revolution.
We certainly believe so as well. That's great. So maybe we can just shift to some of the specific themes. I think when we talk about if I'm a bank or I'm a fintech or a neobank, what are the advantages of stablecoins? What are they going to get? How is this going to be beneficial to their business customers, to their end users? There's lots of benefits that we talk about: global, cross-border, cost, speed, et cetera. But I'd love to hear you each talk about, as professionals that are in the banking industry, have been in this infrastructure for a long time, why is this so superior? Why is this going to grow so fast?
Yeah, maybe I start. So when we look at the traditional financial world, we are very limited in regards to opening hours. So Bank Frick, for example, operates from 9 to 5. We have a lot of public holidays in Liechtenstein, where we have, on the other hand, the blockchain world, which is run 24/7. And so at the end of the day, I firmly believe that we are developing into a digital 24/7 basis society, also the financial market. So for us, it helps to bridge the gap between the, say, traditional 9 to 5 system and then the 24/7 blockchain world, where we can use the stablecoin, which is not really volatile in this sense, to facilitate the payments in this sense, to bridge the gap where our traditional world is not operating in.
Mm-hmm. Oliver?
I absolutely agree with that. And so I'm going to take this from the point of view of from what are the risks that are perceived in the stablecoin market. So last year, you must have seen around this time last year, the BIS, Bank of International Settlements, published this paper on the risks of stablecoins. And literally all of the risks that they listed are actually advantages that stablecoins can offer. So they're talking about legal certainty, governance, AML, market integrity, data privacy, tax compliance. All of these things are actually way more easy when you have a transparent blockchain-based system of money. They also talk about the impact on monetary policy, on financial stability, and fair competition. I think all of these risks which were highlighted in this report are all of the assets, and so they've done the stablecoin a massive favor if you actually read the report properly.
Yeah, no, obviously we believe it's a superior form of money, and is ultimately something that will not just for the efficiency and so on, but that this is actually a more transparent, more secure, more auditable mechanism. Ultimately, as a full reserve model, it has more underlying kind of integrity vis-a-vis safety and soundness than commercial banking money does in many ways. And it solves some of the complexity in cross-border payments of the time delays, the costs, et cetera. It sort of really allows us to move at internet speed as well. I guess related to that, and sort of thinking about the move of banks into this space, more banks wanting to use these rails, support these money formats. A lot of banks make money charging fees, sometimes exorbitant fees for moving value around. But stablecoins make money behave, more like content and data on the internet. The big question is this technology or stablecoins going to do to payments and the payments business model what the internet did to content and communications and the underlying business models that were relied upon by the incumbents there?
Want to go first, Julian?
Yes, why not? I firmly believe so. I think that the technology at the end of the day, the blockchain is the core piece here, and we'll see an infrastructure shift which will definitely turn the payment industry upside down. I mean, we saw a lot of technical innovation already over the last year without using a blockchain. I think once we shift on there, we'll see a complete upside down payment world where, yeah, international cross-border payments are done pretty much instantly or within seconds for nearly no money. I think the whole remittance business model is going to be very, turned around because that is still a service which is, from a consumer perspective, very expensive.
And even, retail payments and domestic payments, right? If you get a stable coin that can on these third generation blockchains can handle very high throughput at a fraction of a penny to transact and settle, that's got to be a threat to people who help coffee shops collect payments too. So it goes all the way there. But Oliver, what are your thoughts on this kind of transformation?
Definitely echo the efficiency argument. There's also the information argument. You can't put a post-it note on a $100 bill and be sure that the information is going to reach the other side. But when you've got this new breed of technology, this is a new possibility, and you can put your real-world legal contract on that. So I think getting enriching money, if you'll excuse the pun, is the the possibilities that are within that we haven't even begun to explore.
Yeah, I mean, it's actually a great segue to something I wanted to talk with you guys about, which is, digital securities, the idea of financial contracts that are written in code that interact with digital cash and stable coins. This whole promise, it's massive. Banks obviously and brokerage firms and others, right? They're really very heavily involved in the securities space, issuing them, custodying them, lending them, selling them, all these different things. What's the role of stablecoins going to be in the future of financial contracts and of digital securities?
Yeah, I think this was one of the large arguments why we integrated US dollar coin BC, especially for digital securities. On the one hand, investing in them, trading them through a stable coin, but then also corporate action dividends payments. It makes so much more sense from an efficiency perspective to use a stable coin like the US dollar coin for this use case instead of relying on the old fiat railways like SWIFT or Zebra here in Europe.
Yeah.
I think there's a lot of evolution ahead of us that's hard to foresee. We embrace, obviously, clearly the whole stablecoin movement, but looking at the smart contract in a market in general, if and when that securities, the tokenized securities market takes off, what we're doing BCB to future-proof for that scenario is so we're integrated with this third-party framework called Dazzle, developed by this lab called Lab 577. It's based on Corda, and it's super efficient at handling these smart contracts. This is one of several initiatives that we have to make sure that we're ready for what this looks like. Obviously within that family is USD coin. And the Blink network that we've just released last week, which is this instant settlement network.
Yeah, well, it's a really exciting space. In fact, I just saw an announcement today. There's an internet company that is paying dividends in USDC, which had done a digital security using smart contracts. And I was in a discussion today with a company, without getting into names, that's in the real estate market doing tokenized real estate, and really stablecoins are going to be critical to how people are able to purchase essentially shares in real estate and also get paid out the equivalent of a note on a continuous basis. These kinds of innovations, tokenization of real world assets. I know we've talked about them for years now, really since 2017 in a significant way. But it seems like now that the infrastructure is really getting there, regulatory clarity is coming into place. Stablecoins are kicking into gear as a settlement medium in some of these as well, which actually touches on another theme, which both of you are regulated financial institutions under a number of different regimes. There's a lot going on there. The FSB is working on its policy recommendations. It looks like the EU is going to put forward at least for discussion and then ultimately for legislative initiative, EU-wide kind of crypto policy that'll be inclusive of stable coins. And the U.S. national banking regulator is issuing guidance to open this up to the financial sector as we speak. Where do you see the regulatory picture for stablecoins and sort of this crypto generally, but specifically the use of these types of digital cash instruments and the infrastructure that we are building on?
I think it's depending a little bit on a geographic perspective. I think we here in Europe, we are a fan of regulation. We like to have that regulatory certainty compared to other continents. I think where regulatory is rather on the second end, where you rather try and then see how it works. We in Liechtenstein, we have since the beginning of this year our blockchain act in law. So Liechtenstein is a completely regulated jurisdiction when it comes to cryptocurrencies, digital securities, and so on. I think for a broader adoption, especially with financial institutions, talking in the context of Europe, a clear regulatory guidance, clear regulatory framework is one of the most important things.
Yeah.
In the UK, it's super cool to see the FCA embracing crypto finally with the crypto assets regulation, which looks at it from an AML point of view. Sooner or later, the FCA are also going to look at this from a market efficiency point of view, and this is where stablecoins actually really shine because in a highly volatile asset like the majors in crypto. Market efficiency is hard to measure and hard to manage, but a stablecoin, by definition, when pegged to a national currency, it's a non-issue.
Yeah.
So phase one of this regulation in the UK, looking at AML, that super positive step. It's going to bring a lot of people into legitimacy, a lot of businesses into legitimacy. Phase two, when we start looking at market efficiency, well, stablecoins already got a head start. We're there.
Yeah. Last question for the two of you. 3 years from now, what do you think we'll see in terms of neobanks, traditional banks adopting stable coins, storing value in them, facilitating payments with them? How far are we going to go in that period?
I think we'll see a broader adoption, definitely. I think certain financial institutions are faster than others, but within 3 years, every financial institution will be somehow has at least research using it. I think in 3 years, we'll have some definitely a first few concept of central bank digital currency, and the use adoption as well as market cap size of stable coins will be increased substantially, I think.
Yeah, definitely. We're going to see that gap close between, circling back to the opening point about the money, the size of the money markets. We've got $1 billion today. There's $1 trillion that's there. That's going to equalize, in my view, over the next few years. That's from a kind of money markets point of view, but also from a capital markets and a lending point of view. If we look at, say, Compound DeFi network, I see today they've got $1.7 billion in total supply, $1 billion of which is in the total borrow pool, a bunch of which is for USD coin. But the point there is that, again, this is scratching the surface. With negative yields on dollar and these super positive, sometimes double-figure yields on stablecoins, that market is going to explode over the next 3 years.
We are in agreement on that. It's actually a good segue to our next guest and a partnership that we announced earlier today, which we'll jump to. But Oliver and Julian, I want to thank you guys both very much for joining us on the Money Movement this week, and hope to speak to both of you very soon.
It's been a great pleasure. Thank you.
Yeah, thank you for having me, Jeremy.
Absolutely. So we've seen and expect this significant acceleration in banks, especially as we've heard fintech-oriented banks, neobanks, players that are moving fast, that are tech forward. You know, we expect more and more to support digital dollar stablecoins. And you know, as just referenced, and it's a really good segue, banking is about much more than payments. It's also very much about lending and borrowing. And over the past 6 months, we've seen a huge surge in markets for lending and borrowing stablecoins, such as USDC. And today I'm very excited to have as a guest, Michael Morrow, the Chief Executive Officer of Genesis, perhaps the largest institutional lending facility in crypto, and whose firm is driving and building very significant stablecoin-based credit markets. Hello, Michael. Hey there.
Hey, hi, Jeremy. Thanks for having me.
Yeah, absolutely. Welcome. I want to start actually just talking a little bit about our partnership, which was announced today. Obviously, from Circle side, we see this tremendous opportunity for yield and credit that's built around stable coins, and you know, we want to provide a way for businesses around the world, for developers that are building fintech apps on top of our platform and on top of USDC, to be able to tap into these emerging credit markets that are built around crypto, built around stablecoin. And first of all, I'm thrilled to be in partnership with you guys, but would love to maybe have you talk a little bit about both the partnership, and then kind of we'll get into a little bit of how that business has grown for you as well.
Happy to chat about it. And likewise, thrilled to announce the partnership between our two firms. We've been close as a company for a number of years, but it's really nice to kind of formalize the partnership via the announcement today. So Genesis, we're an institutional cryptocurrency focused prime broker. And as a business, we've been around since 2013 on the OTC market making side, helping institutions and high net worth individuals do large block transactions in various cryptocurrencies. And we added our lending business, Genesis Capital, in early 2018 to enable folks to borrow and lend crypto and US dollars and stablecoins, and create sort of a yield producing product and holding crypto a productive asset. Whereas previously, you basically had to rely on price appreciation for any kind of gains. The ability to hold on to the upside while earning yield and interest in the meantime was a new element to certainly the crypto landscape. And right along the lines of, hey, this exists in traditional markets, I can do this and earn interest. Why couldn't you create something similar in the crypto world? And that lending business has been very, very successful and kind of quickly growing. And we have over $1 billion in loans outstanding today. And about a third of that loan portfolio, approximately call it $400 million or so, is in US dollars and stablecoins. And as you might imagine, kind of given the popularity and explosion of USDC's growth, a large percentage of that $400 million is also in USDC already. So there is certainly a large institutional size demand for further USDC, certainly on the borrowing side. And I think it certainly makes a ton of sense to enable the holding of USDC to also be a yield producing product. And I think the partnership that we announced this morning about building various lending and yield creation products with Circle, it makes a ton of sense simply because, and we just looked this number up ourselves, we've done over $3 billion of US dollar based lending since we started our business in 2018.
Yeah.
It's a huge number, and that number is only growing, bigger and bigger every single day. And so, really thrilled to be in partnership with Circle.
Thank you, Michael. I mean, it's been fascinating to watch the evolution, and clearly, as more and more institutional market participants get comfortable with, wanting to hold and utilize things like USDC, that fuels these credit markets, even further. And so, I think obviously what started as, people borrowing facilities and things like Bitcoin is now, the sort of stablecoin denominated two-sided markets that you're facilitating. That evolution's been obviously fascinating. I guess one related question is sort of, as a lender, what are the advantages to using a stablecoin? How is it a superior asset from a lending perspective? What are some of the benefits that you guys see?
Certainly. So as folks who are lending to firms like Genesis, and we're fortunate to work with a number of different partners on the funding side of our lending operation. But effectively, I view, and I think growingly, more and more institutional investors think of something like USDC and the dollar as being exactly the same thing. Mm-hmm. And given the regulatory status of USDC and its audited nature, and basically the companies kind of standing behind the product, I think there's certainly growing amount of confidence that USDC of a dollar is a dollar in your bank account. The big difference certainly is the availability of lending capital pool that is available in the crypto market today versus what might exist in other markets. Mm-hmm. And as you might imagine, the traditional lenders, starting with the banks, are not making capital available to companies operating in the cryptocurrency space. I'm sure that'll change, but that might take quite a bit of time. Mm-hmm. And as a result, the interest rates for those products are far superior and much higher than what you might get, certainly in the United States in a low interest rate environment, and certainly across Europe and parts of Asia with a negative interest rate environment, where you are able to earn interest on an annualized basis, certainly about 8 to 10 times what you might be able to get in your traditional bank account. Certainly is a meaningful difference, as one reason to think about, hey, why don't I lend this out in terms of in USDC rather than keeping this dollar in my bank account?
Yeah, absolutely. And for borrowers, right? They can, you're able to transact with them. You can settle a transaction to them very quickly. They can pay you back very quickly. There's no counterparty risk. It's fast, it's cheap, it's secure. Works around the world. You've got counterparties around the world. So sort of some of the things that the prior guests were talking about, the efficiency of the medium is obviously beneficial for a lending operation like yours as well, I'd imagine.
Absolutely. I mean, look, we have a couple different sides to our business, right? On the trading side, the ability to settle Bitcoin transactions or Ethereum transactions and buy sells instantaneously, 365 days, 24 hours a day is incredibly valuable to not have to wait for banks to wire. You do a transaction on a Friday after the banks close, you got to wait till Monday morning to kind of get your money back, right? And 48 hours is forever. Yeah. And so the ability to use USDC to settle transactions certainly is attractive. And on the lending side, there are lots of good uses for USDC on the lending side as well, not just for levered long plays to borrow some cash and buy additional Bitcoin, or get USDC to grow your business from a commercial loan perspective. So for lots of reasons, it's certainly an attractive instrument.
Yeah, that actually leads to the next topic, which is, as the fundamental thesis that we have behind USDC is that this is going to expand much more broadly into mainstream business, mainstream finance, mainstream commerce, that the benefits of this as a payment medium, as a settlement medium are going to be profound. And it's going to find its way into more and more, areas of the economy and use cases. And it seems like, kind of following, right on top of that are going to be, businesses that need capital and individuals that want to, take loans against assets, and it will, find its way outside of just taking loans against things like crypto and into other areas. This sort of expansion into other sectors, what might that mean for a Genesis?
Sure. I mean, the tokenization, the digitization of everything has been a trend that's been going on for quite some time. And as the world becomes much, much more of a digital economy, the idea of certainly digital money and a cashless world is becoming true more and more every day. And so for firms like Genesis, and certainly through our partnership, I think there's so many different creative ways we can work together to extend lending. So it won't simply be Genesis and Circle working to create yield producing products.
Sure.
It'll expand the available pool of capital that is available to enterprise customers that Circle may have and other merchants that have businesses that might conduct commerce in USDC.
Yeah.
And so I think we're only kind of touching the tip of the iceberg here in how the not just the partnership, but with USDC and its growth can certainly do for the entire business ecosystem outside of crypto.
Yeah, absolutely. I mean, we're seeing obviously some fascinating growth and some really interesting growth drivers with just like this theme of dollarization and international customers who are using Circle business accounts that prefer to be able to settle in something like USDC, to hold value in something like USDC, to be able to make international payments in it, which have the utility of the internet. But a lot of these businesses are in jurisdictions where they don't necessarily want their own currency. And if they're able to access credit denominated in stablecoin, or if they have short-term assets and they want to deploy those and hold those and generate yield on them, really, really powerful, not something that is necessarily readily available to them within their regional banking system. So sort of connecting the dots on some of these bigger international themes too.
Absolutely. And I think our previous two guests, Oliver and Julian, we're going to talk about money market instruments. And I think there's certainly a future around, hey, money market instruments actually holding USDC rather than the fiat equivalent, simply because the USDC element might carry a higher interest rate than the fiat equivalent. And so all of those types of things around, to your point, the topic around dollarization, I think presents a tremendous level of opportunity, certainly for your business and the ecosystem as a whole.
Yeah. You mentioned earlier, traditional banks not being in this space, whether, either extending credit to certain types of businesses or extending credit against assets like crypto. Obviously, we saw the OCC giving guidance that hey, banks can hold this stuff, they can custody this stuff. Once banks can hold it and custody it, they can lend against it. Those become underlying assets on their balance sheet. So we may soon see banks actually getting in the game, at least in the US. And, I guess I'd be interested to hear what you think that looks like. And, how do you guys, stay out ahead of that as a prime broker and obviously as a sort of leading lending facility in the space today?
So here's how I view the world. Looking at just simple factors of supply and demand, where interest rate just kind of intersects, right? The demand for borrow in dollars versus the available supply of dollars, leading to interest rates that are, as I said, 8 to 10 times higher than what you might get in traditional, the dollar market today. If one of the big banks, or if one bank does it, my bet is more than one bank does it, is make capital available, readily available, at an effective rate to folks around the world in the crypto space. Mm-hmm. If that were to happen temporarily, sure, the supply gates flood, right? And interest rates might kind of come down. But my bet is that the demand for that even spikes. Mm-hmm. Because I do think if capital were available, that means the biggest banks in the world are making capital available to crypto. That is even further legitimization of the asset class. Yeah. My bet is that there's going to be more new money flowing into the space to soak up those available capital really, really quickly. So that the interest rates will back again naturally kind of normalize to what it might be. So I'm not necessarily sure that simply the influx in supply might do to demand. I'd argue the demand is going to grow multifold more than the available capital supply.
That sounds really good, Michael. I agree with you. I think that sort of next phase of mainstream adoption is a catalyst for even more demand, and obviously you guys are well poised. So Michael, it was great to have you. Congrats, and of course, thank you as well for the partnership. We're obviously very excited about it and what we're going to be able to do together. And as we said in our announcement today, this is part of bringing stablecoins into mainstream finance, and looking forward to working on that with you in the coming years.
Likewise, thank you very much for the partnership as well from all of us at Genesis, and really excited to come up with all the different creative ways we can come up with and create value for USDC customers.
Thanks, Michael. We'll speak very soon.
Bye-bye.
All right, bye-bye. So these themes of banking meets stablecoins, banks holding stablecoins on behalf of their customers, using this as a new payment system that has enormous advantages over legacy payment systems, and the birth of and the rapid ascendance of capital markets, debt markets, denominated in stablecoins. All these are things that were, I think, just a glimmer in people's eyes many years ago, and it's just really exciting to see that accelerating. So we're going to have this theme of banks and fintechs and others building on this infrastructure is going to be a very significant theme, I think, in the coming year. So we'll have a lot more to talk about that on the Money Movement. I'm very excited about next week's show, where we're going to be bringing on what I consider to be a very special guest, the legendary crypto trading OG, Dan Matuszewski of CMS Holdings. By way of background, Dan has been deep in trading crypto since 2012. He built a legendary trading desk here with us at Circle Trade, and he now runs a prop fund with some other significant players out of this space called CMS Holdings. While there's a lot that we could talk about together on that episode, but the theme next week is going to be the stablecoin trade, the history of stablecoins, their role in crypto markets, their current evolution and state, and where things are going. Dan has probably held and traded more stablecoins than almost anyone in the world, and has witnessed their explosive growth, has an incredible amount of insights around this space. And so he's going to be providing what I expect to be amazing perspective, and what is going to be a lot of fun as a conversation. So until next week, stay well, stay safe, and stay informed. Thank you very much.